Let's welcome on board then Sanjiv Bhasin, who's joining in on the show. Hi there, Sanjiv. Good to have you as always. Let's begin by getting your take then on some of these hospital stocks. A lot of the private sector players saying that this is going to be catastrophic for the sector. Jeffrey says that the concerns are a bit overdone and it's actually a buying opportunity. Your take?
Yeah, good morning, Avan. This was something which should have been done years back, and you know that on the pretext of insurance, private hospitals have been laughing their way to the bank. Now, can it be replaceable? It's $1 million question. You've always had CGHS, which trades at more humanitarian rates, and the others make money. And it's very difficult. You cannot be philosophical, and make money. That's the underlying business. I think there will be some compromise. It's been years since you've seen any regulatory change, but it's a sounding bell. If it does deepen, then definitely all these so-called new age hospitals which are branching out, for them that would be an issue to handle with, because pricing is what actually is driving margins, and any cap on that will see some sort of lethargy on both the treatment side and retaining good staff, which is again going to be a longer term issues. So we'll see what it is, but I think just now it's just a small spoke in the panel. I think wiser wisdom will see that there will be a compromise from both sides.
Sanjiv, hi, morning. Wanted to understand what's the prediction for the month of March. The March seasonality indicates that we'll do quite okay, but considering Feb has been a fabulous month, sure, with its bout of volatility, what are we in store for March?
Good morning, Aisha. So GDP numbers, the Nikkei up 10% in a month, not seen in a long time. All indices looking good, but here's the prediction: beware the Ides of March. Julius Caesar was warned by the soothsayer, and little did he know that around the 15th of March, there will be something. So this saying goes back. So beware the Ides of March. You could be in for some volatility there. Take some money home, especially in the mid caps.
All right, a little bit of caution perhaps for the month ahead. Meantime, a lot of these PSU stocks are off quite significantly from their 52-week high now. Not something that's entirely unexpected given the ferocious rise up that we saw. But what's the approach right now, Sanjiv, to some of these PSU stocks?
So, Avan, we've had an overweight on IRCTC and Concor. They have recently outperformed. And we've now started a buy on IOC, HPBP, plus ONGC. We think they are in a very, very sweet spot, given that refining margins will be the best. They process both soft and hard crude. And the rupee has started to be more favorable to them. The rupee started to get stronger, which directly or indirectly only benefits the OMCs. So I think, and they've corrected also almost 15% from recent highs, 15 to 18%. So I think like we said yesterday also, this is an opportunity. Get into IOC, HPBP and ONGC, which I think is connected the minimum, and that could bounce back the strongest. As a disclosure, all these four are in our portfolio along with NALCO. And we think that these and IRCTC Concor are a perfect blend of mixture. On PSU banks, we are slightly turning underweight. We are more positive on HDFC, ICICI, Axis.
Okay, a plethora of stocks to pick out from. That's a set of ideas coming in from Sanjiv from within the PSU pack, and of course private banks as well.
Sanjiv, let's get in a sense from you as well as to what the expectation is when it comes to the auto space. Where is it that you are leaning toward?
So, Avan, like we said, we had taken some money off the table, even though the stocks have gone up slightly more than that. We had M&M and Tata Motors at much lower levels. We booked that. But we continue to be overweight on Maruti on the four-wheeler. Ashok Leyland is our dark horse over there. Motherson Sumi on the OEM. And Bosch continues to be our evergreen play. So we've split the stocks and we've we are going to participate in the Bajaj Auto buyback. So some sort of volatility can come in there, but the stock has more than doubled. So we are trying to mitigate the buyback process and take some chips off the table on the ratio over there. But we continue to think that Ashok Leyland can be a huge dark horse from here, given the ascent of Indigo, the bus market, the return of schools and everything, which is now infrastructure, which is playing up very, very well on their large segment over there.
Sanjeev, want to take your call on Bharti as well. Sunil Bharti Mittal was chatting with us yesterday after him becoming the first Indian to be anointed knight by none other than King Charles himself. He said that he sees ARPUs heading to 300 rupees by the next financial year. What's the call here on the telecom sector?
Well, it's evident in the share price, Aisha. Nobody checks their bills, and quietly but steadily, bills have been going up. I have one connection with IIFL and one with Vodafone. Both every month have some sort of a element which sees a rise, and they are actually in a very, very sweet spot given that data consumption is at its highest. So you've seen Jio all-time high, so is Bharti. Vodafone is at a one-year high, and if they raise capital, then they will be back in the boat. I think, and arguably, rightly so, Aisha, you couldn't have had ARPUs at 130, 140 for such a long time. The competition played out, it plateaued. Now they are back to pricing powers. I would say that, maybe the 300 is an ambitious target, but a 20% upside from the present 200 in the next 4-5 months seems very much on the card.
Meantime, Sanjeev, let's get a take from you as well. Within the entire FMCG basket, what are your preferences?
Yeah, so like we said, we are playing on the rural income, and yesterday the data showed rural incomes are bouncing back with consumption being a very, very big theme. So Nestle top of the list, Bata and Patanjali. Now Patanjali, you've seen some action on it on their Ayurveda and so on, but that's a temporary blip. That is just something of a caution. The type of sales we are seeing, and I travel, to tier 2, tier 3, Patanjali is here to stay. I mean, it is going to get more market share from lever, and on the rural incomes, it's the biggest bounce back. I mean, this stock can even double in the next 2 years. That's what we are betting. But we are betting on the consumption space. Bata and Bata on the seasonality, on the simple reasoning that footwear is a must change, and that jump from campus to Bata is very much on the anvil in tier 2, tier 3 cities. It continues to be one of the favored in the urban basket. Nestle on the back of its predominance in the new launches, and fourthly would be Marico, which we think is very, very well priced for a good a shift towards that. So all in all, we've turned slightly more positive on this space, and we've turned defensive on some of the other mid caps, particularly in the high beta PSU space or banks, railways, and defense, where we've taken some chips off the table.
Okay, that's the take coming in on the market right now. Sanjeev, you made a very interesting point earlier that from PSBs, you're now shifting to private banks, and that's where you're finding comfort in the likes of an HDFC Bank and ICICI Bank. Is it only because they've not moved at all, especially in the case of HDFC Bank?
No, Aisha, yesterday, if you saw, I mean, on your channels only, there was talk of RBI reviewing the CDR ratio, the credit deposit ratio, which has been at a laggard because of the liability franchise. And if there's more relaxation there because they realize that that is an across the board symptom, I think HDFC Bank becomes the biggest gainer of that. And thirdly, you've priced in everything. Let me be on record. I think 1350 will not be tested for this year. And if you break 1500 on the upside, then this could be the best play on the guy. Secondly, like I said, second half of March may be volatile. I think HDFC cannot fall and the rest of the market cannot go up. So HDFC, Axis, ICICI, Kotak, RBL Bank is our top pick there. We've turned extremely positive on them. The risk reward is very favorable, and you will have earnings to be on the upside. Net interest income, net interest margin, and NPAs all fit perfectly in this band. And look, whenever there is too much of crowd on one side, it is always good to be slightly contrarian. You may have time to be played out, but in the end, you will be the winner.
Thanks very much, Sanjeev. Good to have you as always with your stock-specific calls.